It's Life Insurance Awareness Month. Is there anything that you should be doing with your life insurance? Yes, I've got 3 action items, that and more coming up. My name's Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. All right, it's Life Insurance Awareness Month, and there's a month for everything. There's a day for everything. But is there anything that you need to be doing with your life insurance? It is not a fun topic to talk about. When we were first married and needed to get some protection in place, also needed to get our estate plan done, I remember trying to broach the subject a couple times with Cindy, and she just wasn't having it. She would just dodge the questions or not. It made her visibly uncomfortable to talk about dying, especially, so young and everything. And so after a few failed attempts to get on the same page so that we could have a plan to move forward, get the right coverage in place, get the right documents in place, I thought, how's this gonna work? So we had a little long weekend trip planned, and we got in the car and we start driving, and that's when we were able to have a productive conversation about it, because I brought it up. Verbally, she tried to dodge it, but I said, listen, let's sort of talk through this, and we're not gonna belabor it, but let's get on the same page so we can move forward. Basically, what solved it was get her in a car where she couldn't leave, and then we were able to have the conversation. So it's not fun to talk about needing life insurance or the fact that we're all mortal beings, that we're not infinite beings. And so talking about the plan for if something happens to you, what coverage, what protections do you have in place? That's not fun, okay? And even though it's part of your overall financial plan, it's part of protection planning, it's not something that is always changing, that you need to look at on a regular basis, like maybe you do your present financial position or your investments or something like that. But you do need to tune into your life insurance, your coverage, every few years to make sure everything's in place. And so right now, given that it's Life Insurance Awareness Month, good time, if you haven't done a review of your life insurance coverages recently, to do that now. And in order to do that, here are 3 things that you need to do. First, you need to review your existing coverages. That's right, take inventory. What life insurance do you have? How much is it for? How much does it cost? And just review what you have. Oftentimes, you're likely going to have a small policy through work, or maybe a few different policies through work. Maybe you'll have an old policy that you took out a long time ago and then one that you took out later in your career. So you might not have all of your life insurance wrapped up in one policy. And so review what you have and how much and what you're paying and all that, so that you have inventory. This should be part of your financial plan. For our clients, we use a certain system where we capture all of the details of their financial life and protection planning, life insurance. There's a summary page where it shows the company that you have it with, the cost of it, the type of insurance, and all that sort of stuff. All those details are laid out right there. So first action item is know what you have, get that inventory. Second, and again, this isn't something you're going to do every year or very frequently. You'll do it every few years, but do a life insurance needs analysis. Life insurance needs analysis. Now, that's a really geeky term for saying, well, when you are looking at your overall financial situation, all 6 areas, how do you determine how much life insurance you need? Well, there's, just someone talks you into something. Well, that's not a strategy or a plan at all. So when you're planning, there's really 2 different approaches. One is multiple of income, and I've done some videos on that before. We do not ascribe to that thinking. A multiple of income suggests that later in life you need the most amount of life insurance, because later in life, later in your career, that's likely when your income is the highest, and that would suggest you need the maximum amount of life insurance at that time. I get the premise in that if you pass away, your family is relying on that income that is no longer coming in, and therefore having that income, having that income replacement will help. However, at the crux of it, early in your career, likely when you're just getting a family started or whatever, your income's low, and therefore a multiple of income probably isn't going to be enough. But later in your career, maybe after the kids are even out of college or the mortgage is paid off, or you're close to being self-insured because of how much you've saved up, a multiple of income approach says you should have the maximum amount of life insurance. And so while the premise is simple, in practicality, that it's not appropriate. So the second approach is a needs analysis, and this is where you sort of do the fire drill and say, well, if you were to pass away, this year or soon, what would the family's resources be, income and assets, and what are the goals, and basically build out what financially things would look like. It would be emotionally awful. I get that, I know. But financially, do the math to say, well, there'd be this much income coming in, you'd have some survivor Social Security that comes in, would your spouse keep working, would they keep the same job, would they take a leave of absence, some time off, whatever, how much income would be coming in, here's the kind of presumed expenses with the mortgage and all that sort of stuff, and you can mathematically back into, here's how much life insurance that you need. And then that also is going to reveal what type of life insurance you need, temporary, term, which is what most people need, or permanent insurance. And so this life insurance needs analysis is nothing more than a mathematical analysis, an objective analysis to determine how much insurance do you need and what's the right type. And because with action item number 1, you got up to speed on, all right, here's what we have, and kind of task number 2, action item number 2, you're determining, well, how much do I really need? And you're hoping that there's a fit. If there's a gap, then you're going to decide, all right, now do we transfer that risk and buy another policy to fill in that gap? Or do we just live with that risk? Is the gap narrow enough where we say, no, yeah, we probably need 1.2 million, but we've got 1 million and it's okay. We're gonna just keep what we have. That's a decision you'll need to make, but you can't make that decision until you do action item number 1 and action item number 2. And then finally, once you know what you have, once you've confirmed it's the right amount, needs analysis, then the final step is making sure that you've got the right beneficiaries listed. Making sure that if something were to happen to you, you've got the right individuals listed to receive the death benefit, to receive the insurance. If you're married, likely that's going to be your spouse. If you've got minor children, you're going to need to make a decision. Do you list the minor kids, which if something happened to you in the short term, they wouldn't receive the dollars. It would be held by a custodian on their behalf, but then they'd get all the money when they turned age 18. Or do you want a trust listed as the contingent beneficiary, that if something happened to both you and your spouse, the money would go into a trust and the kids would get it at different ages or get access to income and whatnot. But if you're not married, you've got to figure out, well, who would you list as the beneficiaries? You're going to want to make sure that that's updated. Again, should your beneficiary change frequently? No. But every so often, you've got to just tune in and make sure, okay, is the beneficiary right? Yes, it is. Okay, great, we're good to go. So there you have it. Those are the 3 things that you need to do. Not a lot of heavy lifting, and again, not a lot of work that you need to do every single year. But if you haven't done those 3 things recently, you've got some action items, right? Number 1, confirm what you have, review what you have, know what you have for life insurance. Number 2, know that it's the right amount. Do that needs analysis, life insurance needs analysis, and then confirm you've got the right beneficiaries. That's the clarity and confidence that you need, the peace of mind when you review those 3 things. That's the peace of mind that you need. Work with your certified financial planner to not just have that peace of mind, that clarity and confidence within life insurance or protection planning, but in all 6 areas of your financial life. So work with your CFP on that. If you don't have a CFP on your team, you can contact one on my team. Find us online, Korhorn.com. That's Korhorn with K, wisemoneyshow.com. You can find us there as well. Or give us a call, 574-247-5898. All right, there you have it. Go out and take your next wise step in your financial life.